Hello, welcome to the European Open briefing for Wednesday, March the 8th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So the dollar is trading in a very narrow range. Of course, we've got the NFP report coming up on Friday. So markets are looking to that and also the FOMC meeting next week for further direction. But despite the dollar being relatively steady, the gold is still feeling the pressure of the upcoming rate hike. Gold prices hit 5-week lows today. We had some Chinese trade data, which was kind of mixed. Overall, though, the markets perceived the Chinese trade figures for February as positive because it showed rising demand. But the yuan was weaker. But that was mostly due to the People's Bank of China setting a lower midpoint. The other notable mover, though, was the New Zealand dollar. It dropped to 2 months low. It's steadied a little bit now, but yesterday we had a drop in dairy prices. And in European currencies, the euro and the pound continue to drift lower on those concerns about the upcoming French elections and, of course, with the UK, what's happening with Brexit. But let's start with the dollar-yen pair. Now we can see the dollar has been pretty much range bound against the yen. The main focus now is Friday's NFP report, although that will it's very unlikely we will see a very bad report, and even if we do see a slightly disappointing report, I don't think it's going to be enough for the Fed not to raise rates next week. But it's strange that even though the dollar isn't rising any further, the treasury yields today rose to a 6-week high, and this is of course on the back of the rising expectations of a March rate hike. But it should be noted that the rate hike has been now fully priced in by the markets, so perhaps that's why the dollar has limited scope to go further up. So the main focus, as I said, will be what the Fed will say next week in its FOMC statement. Moving on to the gold prices now and also the Swiss franc, another safe haven. Gold prices have been drifting lower, mainly on the prospect of high US interest rates and rising US yields, which all of that makes the gold less attractive. Another safe haven, Swiss franc, that's partly been falling due to the stronger dollar, but also because yesterday we had data which showed the Swiss National Bank's reserves were up in February. That indicates that the central bank is busy intervening in the foreign exchange markets to stem the franc's appreciation. And of course, we had some comments as well from the SME chairman early in the week, who said that the franc is significantly overvalued. That's pretty much repeating what he said previously. But it did have some impacts on the franc. We saw the dollar rising against the franc yesterday, jumping after those foreign exchange reserves were released, although now it's steady around 1.01 against the franc. Moving on to the European currencies, we can see both the euro and the pound have been drifting low pretty much since Monday. We've got the ECB meeting tomorrow, where we're not expecting any changes by the ECB, and Mario Draghi will once again reiterate the fact that the ECB remains ready to ease further if necessary, although it is possible that the Draghi might not repeat that line this time round. But even if he doesn't, it's unlikely he will signal that the ECB is ready to start tapering its QE program. With the pound, though, the pound is mainly down on concerns about what's happening, well, more or less clarity on the Brexit triggering of Article 50. The government was due to trigger that this week, but now that the House of Lords is making amendments, that's been pushed back. It could come possibly next week or week after that. But the only thing we know for now is that it will be by the end of March. The House of Lords made 2 amendments to the government's Brexit bill. Yesterday they voted in favour of forcing the government to allow Parliament to vote on any final deal. So the bill, it's been improved with those two amendments. It now goes to the House of Commons. The House of Commons will likely vote down those amendments, and if they do that, the bill will probably go back to the House of Lords for further discussion. And depending on how long that goes, that could potentially delay the government's timetable. But expectations are that it will be triggered by the end of March. But in the meantime, the main attention for the UK is the budget. The UK Finance Minister Philip Hammond will make his budget statement later today. He might announce some boost to businesses especially under on signs that the UK economy is slowing down, but he's unlikely to give too many giveaways. He already said that he wants to have gas in the tank should the Brexit slowdown get worse. Moving on now to the New Zealand dollar. The New Zealand dollar had already come under pressure because of first of all, the stronger dollar, but also the Reserve Bank of New Zealand had at its last meeting signaled that rates in New Zealand are likely to go up within the next 2 years. But yesterday we had a big drop in dairy prices. Dairy, is of course New Zealand's main export. They fell by 6.3% in the latest bi-weekly auction. So that hurt the kiwi, which fell to 2 months low. It's bounced back just a little bit. It's currently trading at 0.6952. And finally, let's quickly mention the Chinese yuan. We can see the yuan had been strengthening earlier in January. It's been steadily depreciating since then. It had broken 6.90 a few days ago. It's back above that level now, but that's mainly due to weaker midpoint by the People's Bank of China. We had the February trade data out earlier today. Exports were up in yuan denominated terms, but they fell in dollar terms. They were down 1.3% versus expectations that they would actually grow by 12.3%. Imports were more positive, though. They surged by 38.1%, though this was likely due to distortions from the Lunar New Year celebrations, which probably triggered large imports during the month. But analysts see the overall picture in China as rising demand, both domestically and both overseas, which should help exports recover further later in the year. And that contributed slightly to the risk-on sentiment we have today, although it has eased off a little bit going into the European session. Looking at today's economic calendar, we had Japanese GDP data, which was revised up from 1% to 1.2% on an annualized basis in the fourth quarter, but there was slightly below expectations that they would have been revised up to 1.6%. We mentioned the Chinese data. We had German industrial output numbers, which were slightly above expectations at 2.8% in January. And coming up later, we've got the ADP employment report, which is the private survey for the US, and it's a good indication of what will come on Friday in the official NFP data. We're also going to have labor costs and productivity revised figures in the US, and in Canada we're going to have the housing starts and building permits. That's it from me. Thank you very much for watching, and have a great day.